When it comes to investing, we've all heard how important it is to diversify. You don't want all your eggs in one basket or one stock in the event that basket should fall. But while traditional mutual funds have been the way for the typical investor to hold a piece of the investment pie by grouping dozens, hundreds, or even thousands of companies under one fund, it's been the meteoric rise of another type fund that has been turning heads: the exchange-traded fund, more commonly known as the ETF.
ETFs are baskets of securities. They can track an index, or they can just follow a segment of the global markets. They're really good because they give you access to almost anything: U.S. equities, global equities, fixed income, commodities, currencies, real estate. Commodities and currencies can't even be accessed easily without ETFs, and now they can.
A big reason for the excitement over ETFs is their absolute simplicity in trading. Unlike mutual funds, which have their value determined at the end of the trading day, ETFs trade all day long on the exchange, just like stocks. In short, they provide the diversification sought by investors with the simplicity and speed of trading a single stock.
ETFs provide several benefits. First off, they provide diversification. ETFs cover almost all asset classes one could want to purchase. You can trade ETFs intraday, unlike mutual funds. Mutual funds get the close of business trading price. They're also tax efficient, and in most cases, ETFs have lower management fees and transaction costs.
While the mutual fund industry has an estimated $26 trillion in assets, oftentimes with high initial balance requirements and fees, the ETF industry has quickly grown to almost $1 trillion, and it's easy to buy with minimal investment required. From that point on, just like stocks, ETFs can be bought or sold, or even optioned, shorted, hedged, or bundled.
ETF investments are the investment tool for two reasons. One is they're easy, they do trade like stocks throughout the day, and two is they give you tremendous access and a growing variety of things that you can access through ETFs.
And it's always difficult to build your own portfolio using individual stocks or bonds. ETFs allow us to build better and more flexible portfolios, and as investment tools or vehicles, they produce superior results.
So if you think your portfolio is weighted down with large companies or is too heavy into one industry, you can now find a money manager that utilizes ETFs in nearly any segment of the market, both here and abroad. As President and Chief Investment Officer for Metropolitan Capital Strategies, Dave Schambert teamed up with Sharon Snow to start MCS in 2007. Metropolitan Capital has a unique philosophy and approach to investing.
MCS has the flexibility to invest in any asset class at any point in time. Now, this is very unique, as most money managers must track a benchmark and be fully invested at all times. Now, we also have a goal for our portfolio. We strive for an average annualized 15% rate of return while protecting the principal and appreciation. Now, we describe our returns as climbing a staircase. What we do is we make the money, which represents climbing the staircase, and then we protect those funds, which is reflected by the pause on the landing of that staircase. We repeat this process over and over. We protect and invest. We strive to never give back those profits, unlike most money managers who have to track a benchmark and inevitably lose some or all of those profits.
So the MCS strategy truly is a different approach.
A simple description of our philosophy is really illustrated through two quotes. Like him or hate him, Donald Trump says, if you have to think anyway, why not think big? MCS has a goal of 15% annualized average rate of return. That's our way of thinking big. Once our profits are realized, we move to a quote by Warren Buffett. Rule 1, never lose money. Rule 2, never forget Rule 1. We protect the profits once they're achieved. Thus, we minimize risk. The MCS 5-year returns are approximately 100% cumulative gross with no negative years.
As a former financial risk analyst and a wealth manager at Smith Barney, a division of Citigroup Global Markets, Schambert has a strong background in risk analysis when it comes to investing money. This has resulted in a very tactical approach using exchange-traded funds. MCS strategically invests clients' funds when the risk is low, stepping into the market in anticipation of a double-digit return. The portfolio is moved into a protection phase when the risk is high, which avoids the typical roller coaster ride that most portfolios experience. The MCS approach is a winning investment philosophy, and clients avoid negative annual returns.
MCS invests only when we identify a double-digit upside potential with a high degree of confidence. This is coupled with the flexibility to invest anywhere in the market to achieve our goals. Now, the ETF universe, as an example, includes global equities, sectors, bonds, currencies, commodities, and precious metals, yet we are not locked into a specific style or sector of the market for any long period of time.
Basically, our portfolios have one of two profiles. We're either almost 100% fully invested in ETFs, anticipating the double-digit upside return, or we're 100% invested in the lowest risk asset class, protecting the portfolio.
The MCS tactical strategy has achieved approximately a 15% annualized return during the past 5 years, and that goal basically doubles the client's portfolios approximately every 5 years.
There's always risk in investing. There's market risk, systemic risk, geopolitical risk, credit risk, all kinds of risk. Our goal is to eliminate as much risk as possible in our portfolio while not sacrificing upside. Our strategy has accomplished our goal and should continue to be successful, primarily because we define our goal and we use patience and discipline to achieve that goal.
Patience in investing is always one of the most difficult aspects we face. Now, having a long-term goal and a strategy to achieve that goal makes having patience much more palatable. When you have the discipline to stay the course, even in a difficult environment, your goals can be met. We are confident, after surviving the worst financial meltdown since the Great Depression and having achieved a 100% 5-year return, that we can continue meeting our goals in the future.
For investors with Metropolitan Capital Strategies, that's a goal that minimizes risk and maximizes profits. For a full disclosure presentation, please view the MCS fact sheets located in the products area of their website at mcsmgr.com.